Hey guys, Dan Heilman back with another video. Today, we're going to be talking about what happened on this pump. We're going to be talking about being very careful on any late longs. So let's begin. All right, very first thing, what happened? What caused this? We had a big pump. I had a great long entry on Bitcoin that almost hit the exact bottom. I have an affiliate link below for Bitunix if you want to try it out. But just be careful right now, especially with some late longs. Leverage is risky. You can also use the exchange to just buy spot if you want to do so. I caught Ethereum on the bottom. I caught ADA at the exact bottom. I caught Solana pretty close to the bottom and Litecoin literally the exact bottom. My order for Dogecoin did not get filled. It was like literally, I don't even know, a tenth of a penny short. And yeah, so I caught some really great longs. Yesterday was a great day for longs for sure. I was pretty stoked about that once Jerome Powell came out and started talking. Now, what happened? Why did we pump like crazy? Let's talk about it. So basically, in case you don't realize what's happening, the Fed is about to start cutting rates into stagflation. This means rate cuts into rising inflation with a weakening labor market. If you don't own assets, you will be left in the dust, right? Because basically inflation is going to go higher, but cutting rates meaning we'll have more of a risk appetite. The job market's not looking too good. Camel Finance, my boy here, he did a great job of talking about it too. They engineered a controlled demolition by keeping rates high when labor is deteriorating, even by their fake revised numbers, whilst being behind the inflation curve. They've been at target for a while now. Then they came out and they say they're abandoning the 2% target, which makes no sense since they're already at that target, and they have been if you look at Trueflation. Markets rally because cuts are coming, and they think these are cuts into normalization and a soft landing. Somewhere between cut 1 and cut 3, we'll all get to find out that these are cuts into a slowdown and a recession, and we head for the 4-year cycle lows. I am a big believer of the 4-year crypto cycle. If you don't know what that means, I'll talk about it in a second, but basically this 4-year cycle continuously repeats. It's repeated for 4 cycles now. And everyone says the 4-year cycle is dead. And as soon as you hear that, you know it's probably going to happen again. Just as they were late to react with rates, they'll also be late to react with printing, further reinforcing the controlled demolition at the 4-year cycle lows, which are synced up for gold stocks and Bitcoin. We'll see record QE, massive inflation, rates double where they were in the peak of the cycle, and ultimately a full reset to CBDCs. Now, I'm not sure about this one. This is a speculation from him. Could definitely happen. CBDCs are central bank digital currencies. Basically, they're talking about like a digital yuan in China, and they have their social system where they can stop you from doing things based on your posts on social media, etc. So that's a lot of control in that, which could happen. I'm definitely not saying that can't happen. This has been the call since I started my channel, and Camel has been talking about this for quite some time. Powell said the Fed has adopted a new framework that removes the reference for the 2%. If we go to Trueflation, which they kind of ruined the site, I think there's a bunch of like stupid ads, and it's kind of like really lame now and sucks big time. But you can see inflation down at 2%. I mean, it was all the way down to 1.6% in July. So inflation has been low, and we have not been cutting rates. So that's what happened here, and that's why we had this massive pump, basically saying we're going to get rate cuts, which was part of it, but then also saying that they don't care about 2% inflation, and they're going to continue maybe to cut rates. We might see 1, 2, 3. If we go to rate cut chances, let's see here. If we go to FedWatch, what is the rate cut chance now for September? I'm sure it's quite high. This site doesn't like to load. This site never loads. There we go. 75% chance of a, let's see, what are we at? We're at 4.2 to 4.5. So it still says a 25% chance of keeping rates the same, which kind of surprises me. Then we go to October, basically only a 13% chance of staying there. That would have to happen also that we didn't cut it the time before, right? And then target rate, so we could get a cut all the way down to 3.75, which is what, a 0.75% interest rate cut. December, you can see we might even get all the way down to 3.5, which would be 1% cut. Now, the Fed interest rate does not mean that mortgages have to go down with it. Last time we got a rate cut, mortgage actually went up. It's basically whatever the bank is willing to give you, whatever the risk tolerance is. So those don't they correlate, but they doesn't exactly mean that, right? So that's what's going on there. That's why we had this massive pump yesterday. Now, another thing is the liquidity levels. I use these to enter those trades. So all those trades that I hit those longs, I just used this liquidation heat map. So here's one reason why I think we're going to retrace some of that, okay? So let's look at Ethereum, for example. I guess we can just stay here. So last 48 hours, I had a bunch of, basically down here, there was a bunch of liquidity, right? So if we go down here a little bit, you can still see that they kind of didn't pick up all of this. So, I mean, we could easily come back down here, maybe even this weekend. There's a lot of liquidity down here right below, but there was a bunch of liquidity right here at 111,730. So I kind of removed it, but I had these little liquidity areas down here, and that's how I placed this order at 111,780. Okay, so that's exactly how I placed my order, and market makers brought the price exactly down to 111,730 area, right? So all my orders got filled. There was a bunch of liquidity down here, a couple $100 million. So market makers will move the price down there, liquidate longs, and then after we sweep that, we can go back up. And that's exactly what happened. Another reason why is because, right, this just swept the low that we had back at the beginning of this month. Okay. So when people go long, they leave a liquidation here, right? They put their stop losses right under this low, and they go long. And then if they didn't close their positions up here, that means that their liquidation is still sitting down here, right? Or even their stop losses. So they'll come back, they'll pump it right into there, and then you can see the reaction we got out of there. It was quite insane. If you go on the 24-minute, I picked up this order right here. It came back down a little bit more, and then it just absolutely rocketed. So we saw this massive pump as soon as Jerome Powell mentioned all of the stuff that's going on. So that's what happened last night, and that's how I placed those orders. Now, why do I also think that we could see a bearish weekend? One thing is the moon cycles. I know it sounds crazy, but if you look at the moon cycles over the last X amount of time, let me just clean this up and just clean this up a little bit. We'll clean up the chart a little bit. We'll go to like just nothing here, and then we'll if you go here and you just hit moon cycles, here you go. What do we got going on with moon cycles? You can see here on, we'll just go on like the 12-hour and make it a little bit more clear. Bull moon happened right here. I was expecting a pump, okay? Bear moon, it was a dump. Bull moon, pump. Bear moon, a dump. Now, it usually only affects like, for sure, the first half-ish of the window for the bear and bull moon, right? So bull moon, it affects the first half of this window, is from what I've seen. This is not an exact science. I don't even know why it works. I think it kind of ties into the cycles, and the cycles are 60-day cycles, which is 2 months, and these moon cycles are every 2 weeks, I believe. We have a new cycle, and they last 2 weeks roughly. So I think it kind of just times in with cycles. I don't know. It's weird that it works so well. This bull moon did not work, right? This bear moon did not work, right? So this one, I guess this bull moon, yeah, this one didn't work. But look at the rest of them. They all played out, right? Bull moon up, bear moon down. Bear moon kind of went down. So that one didn't really play out. This bull moon definitely played out. Bear moon definitely played out. Bull moon definitely played out. Bear moon, this one's kind of just all over the place with wild volatility. Now, news affects this. Resistance affects this, right? So if you get a bull moon directly into 8-year resistance, you know, maybe you'll get rejected, of course, but it did still pump for the first couple days, right? So this is how accurate this has been, okay? So today's a bear moon. We could come back down. We could honestly make a new low. That is totally possible. I'm not saying that's a prediction and that has to happen, but we could totally come back down here and make a new low below this. We could even come all the way down to retest the bottom of this channel. I mean, that is totally not out of the question. It also depends on how much market makers decide they want to dump everything. Now, again, if we go back to those liquidity levels, you can see there's a bunch of liquidity down now. We go on we're on the 48-hour right now. Okay, there's a bunch of liquidity down here. So I would expect them to at least pull back 50% of the previous move. So this move right here, if we take a fib retracement right here, fib retracement, and you go from the top of this move down to the bottom of this move, the 50% level is 114,530. Okay, so we're already coming back down to it. So If you go to 14,530, what do we got going on here? 14,530. That would mean a 50% retrace. And look at the end of the liquidity is right there. So we could easily retrace to that 14,200, 114,200. Another thing is we have this resistance here. So we could totally come back and retest this 8-year resistance that goes literally all the way back to 2017. So if you draw a line through the daily close of 2017 and through the daily close up here in 2021, you get this line of 8-year resistance that comes all the way back in here. Okay, so we could totally retrace, come back down to there. Another thing that could possibly happen is the bull market support band, which is this moving average right here. If I clean these up a little bit, this bull market support band is a huge resistance. Okay, when we get big pullbacks, we usually get pullbacks into this area. Now in September, that also does seem to happen. So we could potentially get a pullback to here. That's not even that big of a pullback, to be totally honest. So what is that? Even from right here, that is a 7% pullback. So that's not that crazy, but 107K, okay, is the bull market support band for Bitcoin. Ethereum, the bull market support band is much lower. Now, this would be a massive drawdown. This would be a 33% drawdown. I don't know that we everything is on the table, right? So we could easily get a pullback all the way this far. I don't quite expect us to get a pullback back that far down here for Ethereum and some of the others. But if Bitcoin does come down to retest this, a lot of people are going to be saying it's over, but also it correlates with this descending channel here. So we could see this over the next month or two. I did take some profits on Ethereum. I did take a tiny bit of profits on Bitcoin. I actually did it more up here. I took some profits at like 120K. I sold a little bit more on this pump of Bitcoin because usually how capital rotates is it goes from Bitcoin, right? We've been in Bitcoin season for quite some time. If you go look at Bitcoin dominance, you will see this. We've been in Bitcoin season for basically since, you know, even all the way back here in 2021. We've been in Bitcoin season pretty much from here. I guess we'll call it pretty much the end of 2022 all the way up till June. We've been in Bitcoin season. Okay, it usually rotates: Bitcoin season, Ethereum season, large caps, medium caps, small caps. So that's what's going on. Again, I mentioned the 4-year cycle. I forgot to just touch on it, but basically every 4 years we have a halving where they reduce the block reward. That's in this red right here. But you can see the tops have been very predictable with the amount of days, right? And again, I still think the top is going to be sometime in maybe October. It could be later. Now, Bitcoin tops first, as I said, then Ethereum will top, then the other altcoins. So then you're usually after the Bitcoin top is in. Now, usually what happens is it'll get up to the top and it'll kind of just chill there for a while. And that's when altcoins will run. Okay, so that's what I'm looking for. And then again, I'm looking for a big collapse into 2026, October-ish is my target now. These are all plus or minus, you know, a couple months. So there's definitely some leeway there, but Bitcoin dominance is fully breaking down now. And the next target for Bitcoin dominance, usually we get a stop at these Fibonacci's. If you do a retracement from this top zone down to the bottom, let me clean this up a little bit. I was already on that. Usually we'll get some pauses at each one. You can see we paused here. So the next target is about 56%. Now we could retrace this if we get a pullback in September, right? So that is a possibility. Although the Camel Finance indicator is telling me that it's not going to be until the beginning of September. So maybe we just get a big pullback right now instead of September. Everyone is expecting September to be red, and I'll kind of show you why, but they're not even that big of a red September, but that's usually what we see here. So if I go to Into the Cryptoverse and I go to the charts and I go to monthly returns, Bitcoin is usually red in September. So it is the most red month of the year, okay? So it's 5% on average, plus or minus 13. But if you look at the halving years, sorry, the post-halving years, which is 2013, July and August are green. I've been saying this for a while. A bunch of content creators and, you know, KOLs or whatever they call them on X were saying, you know, August is usually red, expect red. And it's like, yeah, on average, it's barely negative, but really, if you look at every 4 years in the post-halving year, 2013, green, green, 2017, green, green, and usually August is very green. 2021, green, green. 2025, green, green. Maybe we see some red. But if you look at these post-halving, 4%, 10%, 2021, 1%. So it's not that red. We're still in a bull market, and I expect us to be biasing towards the upside, okay? Another thing that kind of conflicts with some September pullbacks is the Camel Finance indicator saying right now that we're in the cycle low window, right? So I have a feeling it's going to pick this right here as the Bitcoin cycle low. It's saying we're even in the window for possibly a weekly cycle low. But so basically every 60-ish days we have this cycle low, and that's basically when the low is in. So this is technically the low, and it is directly in the window. So unless in the next couple days we see a pullback deeper than this, I think we're still going to hit back up here, and then it'll be maybe another 60-ish days until the next cycle low. So I am definitely a believer of these cycles, but say that was the cycle low, about 61 days, that would put a cycle low in October, which is kind of weird. So I don't know, that's kind of what's on the table for the future. Obviously, I don't have a crystal ball telling me exactly what's going, but if you do want to trade with leverage, I do have an affiliate link below, and I have been doing some good things on Bitunix. I've been having a blast with it. I have no positions open right now because, I should have left my short open. I had some shorts open and I did not. I hit a stop loss on a couple shorts. We had some good shorts that went through, but I had some very nice longs. Down in here, we had some nice 13%, 23% on ETH. That was a very nice one. 17% on ADA, 6% on Bitcoin. I closed them all a little bit too soon because I've just been sketched out with market makers constantly dumping the price. So I had some very nice trades yesterday. Affiliate link below if you want to try it. You can also buy spot on Bitunix. It's a great exchange, very low fees, even lower fees if you use the affiliate link. So that's gonna be pretty much it for the video, but that's what we got going on. I'm expecting a retrace. We're already pretty much through the retrace. I wanted to make this video yesterday, but it's been quite crazy. I'm getting ready for my son's birthday party, so I was getting the lawn cut and everything fixed up outside, so I didn't have time to make a video yesterday, but that's what we got going on. We're already in the retracement. It's already come down pretty good. I do expect this to come down a little bit more, as I said, because of these moon cycles. I know it sounds weird, but they just started. Literally, look at this. The first candle into this moon cycle. Look at this. It happened at 10 o'clock last night, and the very first candle into this moon cycle, literally like almost to the T, just a little bit before it, right? So if you're on the 4 hour, it's literally the very first 4 hour candle in this moon cycle was red. So again, I think we come back down and retest these areas. I'm happy I closed my longs. I did close them too early. I think I closed them right about here. So after this first 1 hour candle, I was like, I'm out. This is a huge pump. I did expect a retracement fairly quickly. But now ETH also has hit a full-time, all-time high, not full-time high, an all-time high. ETH has hit an all-time high. So this is usually once you see altcoins start outperforming. However, it needs to close above into that all-time high. This was, again, a liquidity sweep. So again, if we go to the liquidation and we go to Ethereum, Binance, there was so much liquidity up here at 48.80. I had a short right at 48.80 that I opened, and I closed in the profit. I should have held it even longer, but I don't like shorting bull markets. And when there's this much momentum, people can just come in with huge orders and buy it up and hit your stop loss very quickly. So you got to be careful shorting in bull markets. But yeah, now again, a lot of liquidity down at 45. I was going to leave my short open until about this liquidity. We're just kind of hanging out here. We either pump one more time or we just come back and grab this first. So there's a lot of liquidity down here. Another way to look at it is the liquidation map this way. You can see Bitcoin, the biggest amount of liquidity in the 1 day is down at 113,680. 113,680. Yeah, look at that. That's down here. That's a retest of this red, and even almost a retest of this yellow channel. So we can definitely come back down here. That's it for the video. Hope you guys enjoyed it. If you did, hit the like button, hit the subscribe button. If you're not already subscribed to the channel, leave a comment. What do you think? How you guys doing? I think we're far from the top, but I think we have a rocky road. You know, it's never straight up. It's never straight up. So just be careful out there with leverage. Use small positions, use small leverage, and close them often. Don't just, you know, go to sleep without a stop loss. I've definitely learned the hard way trading with leverage. It's very risky, but affiliate link below to Bitunix. I have affiliate links to all sorts of things. That's the best way to support the channel. Coinbase. If you want to use the market cipher B trading indicator, I have an affiliate link below for that. I don't get paid really anything from YouTube, so all of my money comes from the affiliate links. I appreciate the support. Have a great day, everyone, and a good weekend. Stay safe out there, guys. Have a great day. See you guys.